What's going on, everybody? Hope all is well. Today's video, we're going to be talking about the Nasdaq. All right, we're in Medellin currently. Look how beautiful it is over here. But yeah, we're going to be talking about the Nasdaq today. We're going to be emphasizing on the contract specific chart of the Nasdaq. We're going to be discussing the unadjusted chart, and then we're going to be talking about the adjusted chart. Let's start off with the unadjusted chart, which is looking really good technical wise. So we have here this rally-based drop, all right, represented by the white line, white rectangle. It currently pierced through that to that rectangle, and now we're inside that weekly, and now we're inside that daily also supply zone, which is this drop-based drop. All right, so we're inside both weekly and daily supplies. All right, so it's looking pretty good. Now, for the campus valuation, we're overvalued against interest rates on the daily chart. We're overvalued on long term. Long term, here, look how overvalued we are. And then short term, we're almost overvalued on this chart. But if we go to the Nasdaq continues, uh, the what's the name? I forgot. The adjusted chart, sorry. The adjusted chart, we can see that price reached the preferred version of the adjusted chart, but the extended version of the of that zone, but it hasn't reached this um preferred version on the weekly, on the contract, on the adjusted chart. On the unadjusted chart, as you can see, it already touched that um weekly supply preferred version, which is the more concise one. All right, look, it already went inside that zone. But on the adjusted chart, it still hasn't reached that zone. And if we look at the daily, it actually reached the daily, but it didn't reach the um the preferred version. All right, so that's something we have to look out for, because ideally I would have loved for price to come into that supply zone and react, but it only reacted off this daily supply zone. So that's something we have to consider. And then on the before going to the contract specific, let's look at what's more important, which is the campus valuation. In this chart, we can see that we're already overvalued against interest rates. All right, so that's a good sign that we can already go short on this market. So now let's talk about the contract specific, which is, if you're a futures trader, this is the contract that you're going to be trading on, which is the NQZ24. All right, so which is the contract that has the most volume. So you guys can see it. Look, if we look to the past, I don't know why it's not letting me look back into the past, but anyway, so let's analyze this chart. We have here this rally-based drop, the same thing as the adjusted chart. We can see that price touched the extended version, but it hasn't touched the preferred version, which is the body to wick. It touched the wick to wick version. And now if we go to the daily chart, we can see that price hasn't really touched this daily supply zone, which is, look, it missed by nothing. Oh, I'm sorry. It missed by nothing. All right. So that's another thing that we have to consider. All right. It already touched the extended version of the weekly supply zone, but the daily it hasn't touched. Well, it touched the extended version of the zone, which is wick to wick. In that case, it already touched both, but it hasn't touched none of the preferred versions, either the weekly or the daily. But we can see that we're already overvalued against the interest rates already in this chart. So what am I looking for? I'm simply looking for on the unadjusted chart, I'm looking for price to do exactly what I drew, which is it's already doing a bullish structure. I'm waiting for price to break this strong support. Look, it was resistance, resistance, support, support, resistance, support, support, support. If we break, if we break under this zone, gives us a pullback, and then we have a bearish engulfing, then I'm probably gonna be entering this trade either on the 2 hour, 4 hour, 8 hour, 12 hour, 16 hour time frame, whichever looks best. And also remember, guys, we're on the election year, election cycle year. All right, we're pre-elections, like we're literally the month before the elections. Historically, there's always a drop in equity indices the before elections. So I'm waiting for this drop for then when elections come, I'm buying equity indices until uh the end of this year. All right. So I'm currently looking for two trades. The shorts before the elections and then the longs during the elections or that week of elections. So that's pretty much it, you guys. If you guys have any questions, let's see how it looks on the 120 minutes. Yeah, definitely. If it if it breaks if it breaks below if it breaks below the zone, I'm definitely most probably gonna be shorting. All right, so that's pretty much it. Hope you guys learned something today. If you guys have any questions, just shoot me a DM or leave it in the comments. Have a blessed week. Hope you guys make a lot of money this week. Bye.